Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar keeps to a weak bias on Thursday following remarks from the US Federal Reserve Chairman Jerome Powell that the central bank was strongly committed to bringing down inflation. He went on to say that we are strongly committed to bringing inflation back down and we are moving to do so accordingly. Powell told lawmakers at a hearing held by Senate Committee on the Banking, Housing and Urban Affairs. When testifying before the Senate Banking Committee, Powell said, "Over the coming months, we will be looking for compelling evidence that inflation is moving down, consistent with inflation returning to 2%. Powell will testify again in Washington, D.C. on Thursday or Friday, 12 a.m. Sydney time. Meanwhile, looking at the technical aspect for the Australian dollar, the market is a little bit softer into the European session, but keep an eye on this support around 68.45.55 as I do anticipate a rebound like previously or even potentially staging a new bull trend, and that could see a rise back towards 70 cents or up towards 71 cents. Euro was pretty whipsawed, as you can see, over the last couple of days. But I do like the way this trend is forming. You can draw all these from the bodies of the candlesticks and potentially might see a break through 106 figure 15 and see an extension to 106.65. Behind this, the dollar index, which measures the greenback strength against a basket of six major currencies, was a little bit to the weaker side, even though we did see a whipsaw price action while Powell was speaking to Congress. However, from the technical aspect, I believe that the bulls still have the upper hand for the euro and could actually see this move up. As long as we don't see a close under 105.35, then I feel the upside potential. And keep an eye on this MACD, that could marry up to the RSI, pop through this 106 handle. Having taken the challenge to that top side, which is around a 24-year peak at 136.70.90 as strong resistance, the market was a little bit hesitant today and actually took a down challenge. From the rejection, there is a bit of nervousness in the field, as I say, to the trading, in case we may see the Bank of Japan intervene due to the weakness of the yen, and therefore could see the market tumble. Now, we do need to see a break of 135 figure. That would give further extension down to 133.70.90 to 133.20 and reassess. Sterling, well, the market was a bit whipsawed overnight after the print of the UK CPI hit 9.1 year on year. And from the given release, ultimately, UK policymakers have little choice other than to hike rates in the attempt to call off rising inflation. Predictions are suggesting that the inflation could top 11% this year. So from the given number, the Bank of England has a great task ahead, which could see them lift rates by 50 or even 75 basis points. Looking at the technical aspect, though, for sterling, I feel from the whipsaw price action, this is close to a weak hammer that we could see a further up test and eventually take the challenge to 124 and reassess. Moving on to a new cross currency, so I've dropped for now sterling Kiwi and looking at sterling CAD. I like the way this pattern is forming and therefore could see further potential to the upside and look towards 158.95 to 159.35 to 159.80. The reason behind that is the fact is that the bulls are pretty strong when it comes to the weekly or the primary outlook. We've got a strong outside range or nearly close, or actually a key reversal. And from there, we can keep an eye on the rest of the indicators that could marry up, eventually take the market higher to 159.80.90 as a broad target, or even to 161 in the larger scheme of things. But for now, looking for the market move to the upside. Gold a little bit weaker, but we haven't seen a close under 1,830. And while we haven't seen that, the market may potentially take another test to the upside, but likely to fail towards 38 to 1,850 to 52 as a short-term cap. Now, if this pattern holds, as you can see from the MACD is weak and the RSI is maintaining a negative bias, then I do feel that eventually a close under 1,830 will see the move back down to the bottom side of 1,800. And looking at that oil, well, it crushed the level of 104 and headed straight towards 101, and now potentially posting a dragonfly doji, that is, if we see this pattern in New York close, which could give further indication of a further rise, and therefore back to above 104, maybe on to 106. And in the meantime, I've been neutral since 104, so I'm still going to sit out for the moment and just see how this candle ends in New York tomorrow morning. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report. I hope you enjoy the rest of the day.